What is going on, true believers? I hope you're having a good evening. My name is Bleeves. We're here to talk about Fibonacci tool and what you need to know in order to successfully use a Fibonacci tool. I've made some changes to mine. I'm not sure what you do with it or if you do anything with it, but I'm going to show you what it looks like for me to be using a fib tool. And we're going to break that down as best I may for you. And we're going to use Bitcoin as our target, if you will. And let's see what this thing looks like. Now, if you haven't used Fibonacci before, Fibonacci is very, very simple. I'm going to do this as fast as I can, by the way, to help you out along the way. Fibonacci occurs naturally, basically in nature. When you see a shell spiral, when you see even facial expression, there's a lot of different things that you will see Fibonacci recur in. And Fibonacci is basically just a number protocol. The first one is a 1. The second one is a 1. The next one after that is 1 plus 1 equals 2. The next one is that 1.1 plus 2 equals 3. So the next one is 2 plus 3 equals 5. So the next one is 3 plus 5 equals 8. The next one is 5 plus 8 equals 13. Next one is 8 plus 13 equals 21. It goes up and up and up and continues to spiral from there. So the question is, what can you learn from that? Well, if you're looking for, if you're looking at a shell, you don't learn anything, or at least you don't for cryptocurrency purposes. But we're going to use our fib tool here. I'm going to show you the best thing that you can do and the easiest way for you to navigate the system here. And I'm going to try to make it as easy as possible. So I'm going to ask you to do a few things here along the way, because I want you to be as informed as possible. So let's kick this off. If you like this type of content, make sure you hit the like button on the way in. So, okay, so first of all, you know what? Let me get you a better view here. Let's do this one. Okay, so the Fibonacci tool is located right over here on the left. It is right there. So what you're going to want to do on that is click on this little arrow here, and it'll give you Fibonacci retracement. Now, if you don't have a TradingView account, go set yourself up with a TradingView account, and you can use this anywhere that has a Fibonacci tool. Now, it's called a Fibonacci retracement tool. Now, the reason that I'm asking you to do this, we're going to click on it first, and then we're going to come out here, and we're just going to open it up. And then from here, after you open it up, I'm going to ask you to go over here and hit the settings. And I'm going to show you this right here. What I'm going to ask you to do right now, just hit your print button on your computer screen and save this and set yours up the same way that I've saved mine. Now, the only difference that I'm going to ask you to do is on this 0.5 and 0.618, make sure those are yellow, because that's your golden zone. That's called a golden zone in trading. The rest of them, just kind of throw them in there with those numbers. The numbers are going to be specific, and most of those numbers are already in there to begin with. I chose green for a specific group here. My 786 number, 0.786 number right here is green, because I do think that that's going to be like your lowest zone, and that's going to be a pretty good go zone, if you will. And then up above that, a lot of different numbers. And then the normal numbers from 0, 2, 3, 6, 3, 8, 2, and 1, we're going to make those just blue. And you can make them any color. Doesn't really matter. This is just my preference. Once you've done that, once you've got that ready, just go ahead and delete it, because you don't need to use it now. In order to use a Fibonacci tool specifically and successfully, what you are looking for is what's called a reversal of a trend. And I'm going to give you the example of a reversal of the trend. This right here is where the Bitcoin ETF was launched right here. Now, from that, you see we were going up, up, up and away. And then you saw a trend reversal as we started to come back down here. Now, what we're doing is we're taking the low from the trend reversal, and we're going to the high of that impulse move. And in this regard, it's going to be this right here. And we're going to move that. And what I'm doing is I'm clicking the tool down here at the bottom, and then I'm moving it all the way up here, and I'm moving it to the top of the wick of that move. Okay. Now, if I want to make sure that I'm in there and I want to make sure that I'm looking at it the right way, I'm going to click on the tool here, and I'm going to zoom in just to make sure that I put this right on the top, because it's not super important, but it's kind of important. to make sure that you're at the right zone. And then once you've done that, and by the way, if you need to, then you can, this thing is right over here to zoom in and zoom out. Those are right there, your zoom in button, and then right there is your zoom out button. So very easy to use. So this, when you zoom in, it's going to give you this opportunity right here, and it'll zoom you in. If you want to zoom out, then you can hit the zoom out button a couple times and it will zoom out for you and get you back where you need to be. So now that we've got this, we're going to look at it and we're going to kind of check and see, like, you know, what ended up happening here, and then how well did it play out or did it not? Now, remember, I'm not using the time. I'm not using the time adapter to replay this so that you can see what happened on the trends, but I'm going to just take you through this and kind of give you an idea of what each move means and how you can make money by using a Fibonacci retracement. So first of all, we had this move right here. This is not where you enter the trade. If you entered right here, shout out to you. You made a pretty good bank. But what we're looking to do is we're looking to move on from that. We're going to zoom in just here a little bit to get an idea of what happened on the charts after that big move. And we're using the one-day chart. By the way, market's starting to pump a little bit, recovering from the American sell-off that just happened today. Dow Jones went down 600 points. Now, first thing that we notice is we came up here to the top, and then from the top, we had found this is the range high. Down the other one, range low. Now, what we're looking for is a move down into a new range. And these ranges are 0, which is the top of your range. Then you have the 0.236, which is your retracement level. Then you have 0.382, and then 0.5 and 0.618. Okay. Now, what you can see here is after making this high, that, by the way, once you've confirmed that high, it's a good time to enter a short, because that usually means that the market is kind of exhausted. Now, how do you confirm that you're at that level? Well, you kind of look up here on your RSI. It's always best to have an RSI. RSI is a relative strength indicator, gives you an idea of, you know, how much trade volume, what it looks like overall, just to give you an idea here. And you can see here when it's up here in green, that means that you are overbought. What that generally means is that new buyers have stepped in and you're looking for something to tell you that the price is going to go in a different direction. And I will show you what that means right now. If I can get off the meme generator, I guess. Back to this. So here we have a top here, and we have a couple of tops that were formed, right? Now, if you look over here and you see this top kind of came in right here, and this top is right here, corresponding to this right here, okay? Now, you have another top over here that formed lower, but up here, you have a top that formed higher. That's called a bearish divergence. And what that generally means is price is about to crash. That means the price is coming down. So we got a bearish divergence playing out, but the price continued to move on. We were in an impulse move up towards the top. But here's what happened. We got this move right here off of this impulse right here also continued to go up, up, up and away. And we had another, this is just a gigantic bearish divergence. And since after that, we reached the top over here, and we see that it's starting to exhaust, if you will. And then boom, that's when we start to crash down. Now, that's what you're looking for. And what you're looking is, if you're trying to be a successful swing trader, then what you're looking to do at this point is you're trying to enter into a trade that gives you confidence that there's going to be a move going up. Now that we've done this, we're looking at March 10 to 12. I'm going to zoom in on this right now. We're going to go to the 1 hour, and then we're going to move over here into that same area on this chart, and this is what it's going to look like. So here's your impulse move. There's your move into March. Now, this is what it looks like on the hourly chart. So as you can see, we had a lot of movement here. Now, once this movement started to play out, what did you see? First of all, what you saw was a move immediately down. And remember, we had a bearish divergence, so we knew price was coming down. So our fib tool tells us that this is our next level. This is the 236 zone right here. So what happens? We get a move down into here, which is exactly what we're looking for. Now, the question is, are we going to get a retracement off of that? And are we going to be pushing up for a new high? Well, we get a move here, and then we get a little confidence out of it because we get this wick, right? When this wick forms, that means that buyers are stepping in and they're not liking the price at this level. New buyers are coming in and they're pushing the price back up. Now, remember, there was a FOMO buildup when this was going on, and that FOMO buildup was causing spikes in prices. So let's see exactly what happens now. And by the way, what I would be looking for in this context would be a move up into this range. And I do want to stress here, we didn't get it because this is not always 100%, but it is a good predictor of the direction of a move. And let me also point out that in the event that you entered into a position down here at this 236 line, and you let this thing ride all the way up here, you're talking about a 7% increase. A 7% increase is an outstanding increase if you are doing a long. If you're doing a long and you're using 10x leverage or something like that, then you're talking about a 72% gain. And by the way, let's just say that you put $1,000 into this trade and it ran up 7.27% at 10x. That's 72.7%. So your 1,000 is now 1,727. What do you do with that? Well, the answer is very, very simple. Once you've seen this happen right here, and I want to zoom in just a little bit so you can see it. Once you've seen a wick start to form at the top, that means that new buyers are not stepping in. And then you see this move right here, in between the two of them, you're going down here on the RSI is going downwards while the price is going upward. That is another bearish divergent, meaning price is going to come back down again. And you can see this on the 1 hour. So what are you doing right here? Well, when you see this, then that means the move is probably over. So here's what you do. Take your initial investment out and you've made a 70% profit. Now, what does that mean? Your initial investment of $1,000 is out, but you have $700 in right now, and you've got two wicks showing you that this thing is cooked, and you've got an RSI showing you that, the RSI is coming down while the price is going up. That is not what you want to see. That's a bearish divergence. That's telling you price is about to come down. So what do? You reverse your position. So let me show you over here what it looks like on KCEX. KCEX is one of my primary sponsors of this channel. So you come down here to your tool, and let's say like right now, I'm down about 10% on this trade. As you guys know or may know, I keep adding to this long, thinking that the price is going to start spiking pretty soon. However, here's what you do. Once you've got into this position and once you've taken your profit out, now you're playing with house money. You got $700. And what are you going to do? You're going to hit this reverse button. And what it will do is it will reverse the position with the same quantity at the current market price. So I'm going to take my $1,000 back out, and then I'm going to take my $700 profit, and I'm going to reverse the position. And what does that mean? Well, what that means is I'm anticipating price going down. And what ends up happening right here? Well, the price ends up going down, but we get a spike coming back up. Now, this is where you're going to set a stop loss, and your stop loss is going to be right up here. Now, the good part about your stop loss, the good part about this stop loss is this. You don't, and by the way, that would not be the exact spot. You would be looking at the top of this previous range over here. I know I might be getting in the weeds a little bit, but stick with me here. So right there is probably where you're going to set your stop loss. You're going to set it right there because that would give you enough cushion. You might lose a little bit, but you're already up $700. You're taking your $700 and you're letting it ride, right? Well, it comes down here and you're in profit again. Okay. So let's remove this and continue to follow this trend. So you come down here and you don't come to the 236 line. You haven't come back down here. So what you see then is a reversal. You see that wick coming into play. Here's the problem. That is not an entry position for you if you're using a fib retracement tool. That is a bad position for you to enter because it is right in the middle of everything. Now, by the way, in the event that you were getting into this and you got into this on this 236 line, here's what you want to do. You want to set yourself a stop loss like right down in this range. Now, you know, it's fortunate that you can see it over here. It's kind of easy, but just a little bit below just a little bit below your 236 line, just in case there is a reversal of direction. You'll take a small loss on that one, and you'll be able to live to fight another day, and you'll be looking at re-entering when it comes down here into this lower level, okay, which we're not there yet. So whoops, don't want to do that. Let's lock that into position now. All right, so you have entered in here and it didn't go up, it went down. So now you're looking at this downward position, comes down, and then it goes back up just a little bit, but you're still in profit because you hit that reversal and you recognize the downward trend. Now, what do? You just hold on to it, let it continue to work for you, let it continue to cook. And then what happens? You come down here and guess what? Now you're in the 236 level. What do you do at this point? Well, the answer is very simple. Take your profit again. However, what are you doing? You've got $700 basically coming into this range here. And what does it do? It's going down 7%. So what are you going to do at this point? Take a little bit of profit out, right? You've got 700, you've made another 70%. And let's just calculate 700 times 1.07 means you made 49 bucks, right? So, oh, you know what? I did it wrong. That would actually be 1.7. Sorry about that. So now you've got 1,190 bucks. What are you going to do? Take out 300 bucks, 200 bucks. Do it. Pay yourself a couple of bucks. That's all you're doing. Just paying yourself a couple of bucks. Now, what happens when you get to this 236 level? What you're doing is you're looking for a sign of reversal. Okay. Now, here's where this gets interesting, and this is why it matters so much. Let's take this position right here, okay? This is where it comes down. Do you re-enter into this position right here? No, you would not. You would not re-enter into this because, well, and by the way, you could re-enter into this position, but what you're doing is you're trying to find an impulse move that takes you back up, and you're not getting that. And the reason that I'm telling you that is because if you zoom in here onto these wicks right here, there is nothing about these wicks that tells me that we're about to reverse and start to spike. These are small wicks. It doesn't give you any confidence that there's going to be a big move into that direction, okay? So what do you see here? You see it start to come up here, but then what does it do? It's curling back over here and it's coming back down. And what does it do? That's where your stop loss was triggered. But of course, you would have moved it by this point because you set it back up here at the top just in case because you're shorting. So this one no longer applies. We'll remove that one. Now, what are you doing here? This is the spot where you're going to take your $300 or whatever it is out. Now, guess what happens when you get here on this secondary spike? Right here, your RSI comes into play. Where's your RSI? All the way down here. It goes a little bit lower. What happens when it goes a little bit lower? Well, now your RSI is heating up a little bit. What does that mean? That means positive price movement is coming in. That is called a bullish divergence. It's going in the opposite direction of what we've seen before. That is your entry call right here into this range. We've just seen a lower high. I'm sorry, we've just seen we've seen a lower low, but we've seen a higher RSI. That means that the price is about to spike and about to go up. So what do we do at that point? Well, we enter our position here and we hit that reversal again. We come back over here and we hit reverse one more time. What are we doing? We're looking for it to go up into this range. That's what we're looking for. We're looking for a big spike. Now, of course, because you're reversing your position, you're going to move out of here. You're going to remove that stop loss because now you're looking for it to spike up. Well, it starts to spike up and then we get this. And here's what you're looking at right now. So when you see this move, we get up here and we get about into the middle of the range. But what you start to see is we get 1 block, 2 blocks, 3 blocks. We're just kind of moving sideways, but there doesn't look to be any great big wicks being made on this at any point. So what happens over here? Then we start to get this move right here. This green candle right here in this range. And I'm going to zoom in on it for you in just 1 second so that you can see it a little bit better. But you move into this range right here where we've got it circled. See that big wick right there? That indicates that we found another top and that it's probably coming back down. So What do we do at that point? Well, that's where we go ahead and take our profit. Now, what was it we were on? We took out, $300 at that point. So we have about $900 sitting here, and we just caught another move about 5%. So we got 50% lift off of that. So we've got about $900 into this, still sitting there, times 1.5. And that means that we're at $1,350. What are you going to do? Take your profit at this point. Just take your profit. Continue to take out a little bit more. Put yourself at, take out $400, something like that. Keep yourself at around $1,000, because now you're on house money. What have you done so far? Well, what you've done so far is over here, you got your initial move that allowed you to take your original 1,000 out. So now you're in profit because you allowed it to come back down here, and you took your profit on this one, right? A couple $100 here. So now you're at 1,200. Now you move back up here, you're at 1,500, right? So now you've taken $1,500, and what do you have that you're working on? What you have that you're working on at this point is $900 still left in this long. And what are you doing at this point? Well, you're seeing these wicks. So what are you going to start doing? Well, now you see the wicks starting to crop up, and now you see this sideways movement. Are you going to get price go up? And that's what you're looking for. And you get a little bit of a move right here. You get an impulse move off of this. But what you're looking at this point is you're getting a high over here. You're getting another high over here. And what are you getting? You're getting a lower RSI each time. What's that? Bearish divergence. What does that mean? Price go down. Now, over the next couple of days, what do you see happen? You see the price go from here all the way down to here. Now, let's just assume that you recognize this and you shorted, and then you didn't fade this, because what did you do? You come up here, you set your stop loss a little bit above, because already in profit. You're already in profit. You've already got some opportunity to take some risk. Now that you know that you can take some risk, then you just let it sit. And what happens here? Well, you move a little sideways for a few days. You're not making anything, but it's moving sideways. And then what happens? You get this little spike right here, and then boom, it absolutely dumps. And what does it do? It then comes back up for a retest. You start to see this spike, right? When you see this spike start to happen, you know that a retest is coming, but you know the retest is coming to the 236. So you're comfortable and you're deep into profit at this point. Now, at this point, when you come back down here, what are you going to do? Take another little profit, something like that. You let the impulse move kind of play out here. It's not going sideways, it's still going down. So allow it to play out. Now, what does that look like? You had $900 in here. Just again, we're just kind of going with a random number here, but you reversed around here. And now what happens here? You come down here and you're about 9% in. So now your $900 is, let's just say we're at 80%. So that 80% is 720. So now you have $1,620. But like I said before, you're getting some wicks down here, so you know it's going to reverse. Is it going to spike all the way back up? Probably not. Probably going to go back to the 236. You're still in profit at this point right now to this level. So this is where you decide whether or not you're going to take some risk or not. This is where you decide, maybe this is not enough for me. Maybe I think that this is going to continue on. And if you think it's going to continue on, then even at a reversal, if you get, by the way, again, remember, you're in deep profit here. But when you get back up here, if it starts to go up above it and it starts to spike up and you start to move back into this range, you can go ahead and take your profit at this level, take a few bucks back out. Again, all you're doing is making sure that you take your profit and making sure that you're not getting wrecked. And by now, at this point, you've probably doubled your money just by pulling out a little bit here, a little bit there on this trade. Now, that did not happen. You got this wick right into it. And when you got the wick right into it, what do you know is going to happen? This thing is coming down some more. Where is it going? Probably to the next low, which means that you now have a big time move. So you take your big time move here, and guess what this ends up being? About 11%. So 111%. So now your $1,000 originally, you've taken a few profits off of. You have about $1,600, $1,700, $1,800. And now you're taking $900, $1,000, something like that. And now you got 111% off of that original move. So what do you have right now? Now you're going to take another $1,000 out of this because you just got a big time profit. Now you still got $1,000 that you're working on, but you've already made almost $2,000 in profit. And it's just that easy to continue doing this. And look, here's the thing. We're going to zoom out because I'm going to stop talking. Now I'm just going to show you. And look, What you're doing at this point is you're just trusting your levels. You're just trusting the levels. Okay. So I'm going to delete this. I'm going to delete some of this stuff here. And now we're going to move forward and just kind of continue to do this. Now, of course, we remove our spots right here. We remove our spots right here. Now we've come down here. We're not exactly at the 382 line yet, but we did get kind of close. We got this nice big amount of wicks. So what do we do when we got a nice big amount of wicks happening down here? We've got a move down this way and we've got to move up this way. Bullish divergence playing out yet again. What does that mean? It means time for the spike. So we're going to spike back up and we just bust right through that 236 level. And then we start to find a top over here, right? When we find that top over here, take your profit or let it ride. That's your call ultimately on what you want to do. Have you made enough profit? Now, of course, when you do this, your stop loss gets set right down below that 382 line. And now you're just waiting to see what happens. The other thing that you're going to start to see as you start to make this move, right, is we're starting to get higher lows and we're seeing that start to play out. Now we're seeing a move and we're still seeing higher, we're seeing higher lows coming in, but we're seeing lower highs coming in. Then we get a nice little spike over here as a continuation. And we've confirmed now we have much lower highs. Okay. That means new buyers are no longer stepping in and we've got a full on kind of trend reversal. So now we got downward motion here. Now let's see what happens over here on the RSI. On the RSI, we have this right here. And then over here, we have this up here. What does that mean? That means a bearish reversal, a long-term bearish reversal, couple days. I say long-term, couple of days here, but this is a bearish outlook on the chart. And what happens from that point? It comes down even further. So there you go, guys. I'm trying to make this as easy as I can for you. Look, grab your Fibonacci tool and start practicing and start doing this. And by the way, you don't have to invest any money. Just come out here. You can copy, you can paper trade, you can practice. You can just put a fib retracement tool out here and start looking at your levels and see what they look like. Now, I did this on the daily to create the 1 hour setup that I have over there, right? So, we can see that right now. We can see how this whole thing is played out. We see all of our levels. We see everywhere that we wanted right there. We're going to remove that because we don't want to leave that on the chart. Now, here's the other thing. If you decide that you want to do this on the daily, if you're doing this on the daily, then what are you looking at right here? Well, if you made this move and you got up here and then you decided to short, right? And then it came back down here into this 382 over a couple of days. Then you got a huge move. Then you expect a reversal because you got this big wick. You don't catch the bottom all the way. Let me pop this back up on the screen for you real quick. There we go. So you get up here on the daily, it comes all the way down to 382. That's when you take your profit. Then it comes and you reverse the position because you got this nice wick. Then you reverse the position. Then you get another nice wick up here. You do the same thing. You reverse your position. You short it back down. Let it come all the way down here. And guess what? Now you're entering into that golden zone, right? So then it does not make it into the golden zone. It starts a big reversal. When it starts a big reversal and you get these two candles right here, then you know this thing is going to rip, right? So what does it do? It rips because that's what happens. Then you start to see these candles forming up at the top again, and you're not getting that continuation look. And what happens? Now people are tired. They've exhausted themselves. So what's the next step here? The next step here is to look for it to come down. And of course, it gets locked in right here at that 382 level. But we're already looking at lower lows. So we should be able to expect at this point, you see how it's coming down like that? We should be able to anticipate that the next move is going to be a downward move. And that downward move comes all the way into this golden zone. Once it comes into this golden zone, what happens? You get these strong wicks right here. And over a couple days, you spike back up. And here you are one more time. Now, when that happens, you've now recognized you have a pattern emerging of lower highs. Also, consequently, you're starting to recognize you've got lower lows coming in. So what you've got is this widening channel which is not going to end well, by the way. That's going to end up with a big come down, right? Well, there it is. The big come down comes all the way down into 49. And then what happens? It spikes all the way back up to 65. Guys, it is very, very simple in this market for you to make just an absolute killing. But you have to have the tools, and you have to use the tools that are at your disposal. The Fibonacci tool is something for you to use that will make your life dramatically easier. And all you have to do, and by the way, when I'm showing you this, hindsight is 2020. Is it always right? No, it's not. However, here's the good part. A fib tool, and we're gonna need a clean chart for this. Let's we can pop, you know what, let's do MSI. We're gonna do MSI because I haven't messed with this one for a little bit here. Now let's look at MSI. We're gonna do this on the 1 hour over here. We're gonna remove what we have on the chart right now. If you're a fan of MSI, by the way, I get a sense here that we're probably going to get a nice little significant spike here. But let's just, what we're doing is we're going to remove all of the stuff that we had on here before, right? What are we looking for? We're looking at a downward spike, right? We're looking at a downward move here. And what am I trying to find? Trying to find a trend reversal. So trend reversal happens right here. And where does the spike go? Right here. Now, that's a larger spike. So I'm not looking for this all the way. So when you see this and you see that spike and you realize that spike is actually a couple days long and it really had a trend reversal kind of happening right here. So now knowing that, what we want to do is we want to take the fib tool and we're going to do it from here, which is at the bottom. And we're going to do this up to the top up here, right there. And I'm going to show you something magical that's happening right here. So that's the top. Now, again, I don't know if I got the top just right. So we're going to zoom in right there and make sure that we got the top. We did not catch the top exactly. We're going to put that top right there. All right. Now we're at the top. So now that we have the top, we can also use the extension of this fib tool to see what could happen. Now, let's just operate under the assumption that we've got this right? We've got, let's move that up just a little bit right there. Now, what exactly happens? We're going to put that right there. What exactly happens after this? Let's watch this thing play out. So it goes, and it goes to the zero. This is where we get the reversal, right? And by the way, it works on every, it always works. Again, this is something that occurs in nature. Just all you have to do is have a little confidence in it. Now let's remember here, when you're talking about a coin or a token that has a low market cap, they're incredibly volatile. When we look at the market cap on something like MSI, its market cap is only 4 or 5 million. It's not a big market cap. Right now it's 3.59 million, 457,000 in liquidity. So we're not talking about a gigantic market cap to begin with. That means it's incredibly volatile and it will not always respect what you're trying to do. But let's just assume that we found this and we didn't enter the trade down here, because that's not what we do. What we're looking to do is we're looking to swing this, right? We're looking at to be a swing trader and try to figure out what's going to happen here. So we get the move up here, right? And then if you look at this over the course of a few hours, what happens? It comes down. And by the way, we just drew this up, okay? And what happens? Comes here. It starts it sits right there for a second, but it's dumping, right? And it dumps all the way down to the 382. After it does that, what does it do? Comes back up for a strong retest. This is a symbol of strength. Then what does it do? It comes back down, mints a higher low, and then it goes all the way back up and it does a second test of this. Now, when you see that second test, which is important, you've got this going across here, right? You got that test, but you've also got this test over here like this. So what you've got is basically a bearish divergence also playing out again. And what does that mean? What does that tell you? It tells you price go down, because what you're getting is you're getting the same or a higher price on a retest, and you're not getting you're not getting the same sort of pump here. You're getting this is just a little bit lower across the board or dead even, and you're getting more buyers kind of stepping in to create the same price. So the sellers at this point are winning. So what are you doing? At this point, that's where you're going to enter into a short position, or you're just going to wait for it to come down. Now, what does it do? It continues to come down. It tests 382, but now it's losing steam and it's testing right in here and it's not able to break out. And what happens at that point? Now people are going to decide, I'm going to sell because we've reached the top. It's done. This move is done. This impulse move has been completed. We need to find a lower price for new buyers to step in. So what happens? Then we start to dump hard. And what happens when we dump hard? We get into the golden zone right in here. And now we're in this golden zone. Let me zoom out here. You can see that whole zone right here represents that golden zone. So what do we do with that? Well, we look for it to start to buy back. And if we see something start to buy back, then we know that there's going to be something strong happen. And what happens? We get an entry position right here. And then what happens? It goes a little sideways for a few hours. But then what happens? Boom, we have an absolute breakout because we can see that we've got into the ratio here. Now there's a big move coming. So how high does it go? And this is going to play out perfectly. And this is why your tool should be set up just like this right here. If you didn't before, take a screenshot of this one and use the same tools right here. Use a -618, a -1.618, a -0.382. Okay. Now what happens? What happens? It goes and it spikes. And where does it go? It goes beyond zero, right? And then where does it end up? At -618. Now, if there's positive momentum, if there's real good positive momentum, then the next level for this is -1.618. That is that golden ratio. So what you would expect here is a move up into this 3,000 level, but we didn't get that. Market sentiment would not allow it. And then we got an enormous sell-off happening at that point. Now, what happens at this point, right? Now we have to go back. We have to use our RSI. We have to look at it to see whether or not this makes sense, okay? And what happens? We get this move here, and we get a move here to here, right? Going up, new highs, but what are we getting? We're getting new lows over here while we're getting the same thing happening over there. We're continuing to go up, but this is telling us that we've got a bearish divergence playing out on the chart again because we're getting higher over here, but no buyers are stepping in, which means that what this means basically is that the people who are already buying are just continuing to buy. Now, that's good in one context. That's good in the context that you have, how do I say this? It's good in the context that you have investors that are holding on and investors that are willing to continue to DCA and buy, but they're buying on the way up. What are they doing? That's the question you got to be asking yourself. If they're buying while the price is going up, what is that for? That's to trap you. So what they're trying to do is they're trying to push this price all the way up as high as it can go to get you to continue buying and continue pushing it up, because all they're doing is just DCAing all the way up here. Price go up, price go up, price go up. Their money goes up. Now they're the ones that are selling on you right up here. And then what happens is you see that bearish divergence. What's going to happen next? Dunk. And here we go back down. Now we haven't even come down into that golden ratio again yet. Now the question is going to be what happens with MSI from here. And for that, you got to kind of look over here and see, well, we're kind of in the middle of the 382 to 236 at this point, but we also stopped right there the last time. Now, why did we stop right there the last time? And as you look back here, you'll see we've now encompassed some trade volume that existed like right here in this range. And this is where buyers and sellers are stepping in. So we're just because we're in this doesn't mean that it's going to play out perfectly every single time. It's not going to play out perfectly every single time because you never really know how the market is going to react and what crazy stuff might happen. So what are we looking at right now? So at the moment, we got this spike right here, which I'm going to suspect, by the way, was again the same thing. It was existing buyers stepping in because we got no wick over here. We just got this crazy move up and then a continued run up here. And then we got this dump. Now, the fact that this here matched this here usually means that that person entered right here and then exited with a smaller profit a few hours later. That's what that usually means. If you look at the same thing happening, it just means that a trader came in and started doing something. Now, if you look at this on a shorter time frame, let's take another fib tool and let's look at it from the top to right here. And what do we see? We see the whole structure of the market broke down and came to the 786 line. The 786 line is where we should get a strong bounce if it breaks down like this. The problem with that is that we're watching and we're witnessing manipulation. This is a gigantic manipulation of the chart, and you can make that out by, again, if you get a big set of buys coming in and then a big set of sells coming in a few hours later, that is pure manipulation. So that was just somebody coming in trying to trick you into getting back in so that they could sell as high as possible. That's all that was. Now, because that happened, that created bearish sentiment. So where do we end up? We ended up right back down here. So what would I suspect to happen? Well, if this plays out the way that we saw before, which is that line right there, if we get a bounce off of here, then I would look for a continuation. What kind of continuation would I look for? Well, when you come up here and you look, we're really kind of just going across right here. So long term, I would suspect that we're going to have another test up here in this 16 or 17 range. That's what we're testing for. We'll see a little trade sideways here, maybe a move up into here, maybe some, chop and stuff like that, but then another big test coming up into that direction. That's what I'm going to be looking for. Now, here's the thing. I don't know that that's going to happen because you're looking for, and I'm wanting to see an impulse move taking us into that sort of situation. And any news could come out, anything could take us to a new level. Again, because there's low liquidity and because there's a low market cap, it's a little more volatile than your normal products out here. So that's it. I hope that I just simplified this, and I hope that you guys look. The best things you can do, just go watch this a couple times. Listen to me, follow what I'm talking about on these charts, see what I see, figure out that each one of these levels represents a buy opportunity. And look, you're not going to be right all the time. The hard part about trading, the hard part about this is you're going to get it wrong. So if I say right here that I'm looking at it with that candle right there, that I'm looking for a short entry and it comes down here like this, and I'm like, oh yeah, here we go. And guess what happens? You go to sleep right here and boom, you wake up and you just got liquidated because you let it grow too long, right? It didn't come in. Now, here's the thing. What I would have done is you saw this right here. You're looking at the wick happening, right? So you're going to enter the position somewhere like right here, suspecting that it's going to go down, right? And then you're going to set a stop loss, like right again. You're going to set it right around that 3.2, right on the other side of your fib retracement line, just in case, so that you don't lose too much. And guess what? If that happens, then you would have had a nice little profit here. You wouldn't have taken the profit and you would have gotten stopped out somewhere like over here, like in that sort of range, right? And you would have lost a few bucks, but you wouldn't have lost everything that you have. You just, look, sometimes you just lose a little bit because it doesn't do what you want it to do. Now, in the event that that happened or didn't happen and you saw it and you witnessed that this reversal was coming in, you couldn't have predicted what was happening right here. The reason you couldn't have predicted what was happening right here, or at best, this would be something for a couple of hours. That's the only prediction that you can make. Why? Because you got this big candle showing a spike in price, and then you got this big seller coming in a few hours later to sell everything back. They were just trying to lock people in to see what it looked like. So that's at its simplest form what's going to happen here. So now, again, if we break this market structure, then I would think that we're going to move down in here and we're going to come into this. We're going to come into this 382 line, and then we're going to have another test of 1250 right into this range right here. So, I mean, that's and by the way, it's not limited to MSI. It's not limited to anybody. The fib tool works on everything. Now, I'm using the 1 hour chart, by the way. If you come in here and you look at this on a 1 minute basis, and you can do this on a 1 minute, by the way, you're looking for a trend reversal, and you're putting out your tool to see exactly what happens, and then you can make your determination from there. But I mean, this is what it looks like on a 1 minute. And by the way, did you notice that this market structure right here looks almost the same as it looked like on the hourly? Let's go back to the hour. This hourly thing, this was hours ago. This was Monday the 2nd, right? This was yesterday. And it was 3 a.m. in the morning when this finally played out. But let's go over here and let's look at it. And guess what? On the 1 minute, you're seeing the same market structure playing out again, right here and right here. Somebody stepped in at 3 o'clock yesterday, and somebody stepped out. Oh, you know what? I'm sorry. That's the, let me do that 3 minute. Yeah. There we go. You know what? It's the same one. We're not getting a minute chart. I wonder why that's not happening. Oh, you know what? There's no trades. That's what it is. There's not enough volume over here on wherever I am, Uniswap. So there's not enough volume on Uniswap for constant trading. So we're not seeing it on a 1 minute chart playing out that way. So that's still, we just don't see it at 1 minute. But this thing works on every single level. So if you have a 1 minute, you can use it on 1 minute. You can use it on 5 minutes. Look, if you're doing trading, the best thing to do when you're doing it on trading is use the 30-minute chart, because the 30-minute chart will give you a little more detail. You can use the 15-minute, but it's a little bit more risky. 30-minute chart is the perfect way to trade. 1 hour chart as well. If you don't like doing day-to-day trading, just use the daily. The daily works just as well. And again, that's where we got the original fib. That's where we got the original fib retracement. And it seems to be playing out to perfection. I would just be looking at these lines. So, there we go. That's my time. That's it. Thank you so much for tuning in, guys. I appreciate each and every one of you. Do the same thing. Again, let me do this one more time so that you can see this in case you haven't before. Take a screenshot of this. Let's just put that up there big. Take a screenshot of that right there. Set your fib tool for the same thing. Find a trend reversal. When you find a trend reversal on something, then just lay out a fib retracement, just lay out a fib tool. And then guess what? Everything is going to be a lot easier on you to make moves. And with a little bit of confidence and with a little bit of practice, guess what? You're going to find a lot of big wins that are coming to you. And it's all going to be because you just paid attention, you just listened, and you let the fib tool do its thing and show you what the levels are. And again, all this stuff happens in nature. All of this stuff happens in here. So all you have to do is listen. If you do that, you're going to be successful. Anyway, that's my time. We'll see you guys in the morning. It's not financial advice, but I'm always right. And by the way, let's pay some bills. Guys, we're in accumulation phase, and Cryptonomy.finance is the place for you to go in order to stake. You guys have seen what I've staked so far. So what I'm going to do is I have 10,000 XRP, 6 months. Again, wondering what the bull phrase is going to look like. 32% yield off of that. So off of 10,000 XRP, I should have 13,246 XRP when I'm done, minus fees. Boom. We're ready for the bull run. We're going 20,000 into the bronze level. All right, we got $20,000 into this pool. We're in the bronze pool right now. You can see the details of what I've done so far, how much I've earned off of it. My earnings have been just exponential. Why have they been exponential, you might ask yourself? Well, these guys are investing into each one of these launches, and look at some of the results that they're getting. They're picking and choosing the best launches. ZK Sync 4.5x, Ethora 3.5x, Sharp Psi 3.5x, CoinPay's 4.7x. They're looking for real solid projects to invest in, and then they're getting this big yield out of it. So if you want to sign up at Cryptonomy.finance today and